The kickoff to Big Short Week. They are the traders who shorted the housing market ahead of the financial crisis. Their story was documented in the best-selling Michael Lewis book, The Big Short, which was turned into a feature film. Now they're back here on Fast Money for a Big Short reunion. Seawolf Capital co-founders Porter Collins and Vincent Daniel, and our guest trader, Danny Moses. It's great to reunite you guys. Great to have you here at the NASDAQ. Yeah, already. Well, they are in already.
Good to be here.
Why is it picture me in the preview so angry? They look so happy, and why is there a reason that?
Have you looked in the mirror?
Yeah, very good. Nice,
All right,
nice.
Let's get started. Where are we in the markets right now in terms of this rotation? I don't know. Vinny, you want to start off?
The first thing is the rotation, I think, was a function of the fact of started with the debate, even going back there. And clearly, there was a lot of institutional capital that was offsides. And heavily long 20 names, the 7 that everyone talks about, and underweight everything else. And all of a sudden, you had to take out your playbook and say, what does a Trump administration look like? And then once they started doing that, they realized that they had to make decisions on their portfolio. And that's why we had what I would like to call this 2-week, and we see it every once in a while, so we'll try to figure out whether it's more than just, a one-time thing. They had to figure out where are we long, where are we short, where are we wrong. And that created a massive factor volatility rotation. Time will tell whether that will continue, because there's still a lot of momentum to want to own the Mag 7, but that's what caused this massive volatility.
Right. Porter.
And so we're having fun with this new tagline that we've got going, and it's make volatility great again. And we wish it was make value great again, but we'll see if that's the case. But we lived through 16. We saw how the financials and the industrials and all really accelerated. And, with Biden, he hasn't spoken a lot. And we know that when Trump comes out, he comes out every day. And his stock market's a report card on how he does. And, he's already flip-flop on issues. And so, and a lot of the things that, first of all, this is not a political opinion. Vincent and I have learned we cannot have opinions. We can have views on which candidate may or may not win. Yes, yeah. Exactly. Mm-hmm. So, when you think about some of Trump's policies, that they have the, lower taxes and, lower dollar. But the problem with that is that doesn't really mean low inflation, right? He wants low tariffs, but that doesn't really mean, lower inflation as well. He wants, more tax cuts. But the problem is that doesn't lead to lower deficits. So I think there just brings in a lot more volatility. And, for guys like us, we still haven't really retraded our portfolio yet because the fundamental themes are still in place, and I think a lot of investors have the same view as well. Like they don't really want to sell the Mag 7s, right? We don't own any of the Mag. We own Google, but that's it. We don't really own tech for the most part. So, I still think there's a lot more to come. Right? This is a slight degrossing event the past week, and regrossing this week. So we'll see what happens.
All those factors that you mentioned, though, indicate to me that this narrative, which has been gaining traction, which is contributing to this whole, change, is the soft landing narrative. And so if what you're saying about Trump is true, and many people do believe that, that's the path if you go down a Trump administration in terms of these different, higher inflation, et cetera, then that soft landing narrative is in jeopardy.
Certainly. We were together.
So then what wins out?
We were together in 2016 when Trump won. And brought out the playbook, and a lot of it's similar. And the sector that we happen to trade is banks and financial services, which are most impacted. I want people to think about things like this. Forget about your political party. The CFPB, which was set up to protect consumers and not allow credit card companies and payday lenders to take advantage of consumers. Auto delinquencies right now, basically an all-time high. Credit card delinquencies, basically an all-time high. So you think about, get rid of regulation, you should want the CFPB out there. So there's certain stocks and sectors that are moving, and that's the stuff as a portfolio manager or analyst you have to do, you are paid to do, regardless of who you want to win. And so as far as the economy, to your point, this soft landing narrative, I think at this point, it's been 2.5 years since this whole rate cycle began, or basically was insinuated it was going to begin. You can call it what you want. But the point that Porter made, and I care about the deficit, and I care about debt, you're not cutting taxes if we go into recession or a slowing economy. It's just not going to happen. The math doesn't work. So people need to think, I think, longer term about these issues other than trading stocks near